Good morning, everybody. This is the live market open for August 17th. It's Wednesday. Hi, Luca. Hi, everybody. I'm Yohay, Elam, Forex Crunch and Market Movers podcast, doing the show as usual for FX Trade. Good summer morning to everybody. As usual on the show, we'll cover recent developments in markets. There's a clear trend going on, at least, and volatility is not that low. We'll, of course, discuss charts and levels, do a preview for the main event of today. That's the Fed meeting minutes. Hopefully it'll be interesting, and we'll focus a bit more on pound dollar, which is is the star, in my opinion, of this week, and of course a preview for next week's events. As always, your questions are more than welcome, so in case you cannot see the chat box alongside the video, please go to the address here, tlk.io/fxreit-forex-live-video. All right, so what's going on in markets? Well, there's a clear trend. The US dollar is retreating. Weakness in the greenback. The main reason, I would say, is the retail sales report back on Friday. We had, of course, the week beforehand, we had an excellent, it was the non-farm payrolls. It showed a good gain in jobs, good gain in wages, but then came the retail sales report. It was flat, okay, month over month. The control group, the excluding gas and autos, the core retail sales were all down. There were some minor upward revisions, but it wasn't good enough. That hurt the dollar on Friday. Then we've seen a reaction, sort of a risk-off reaction. The yen was the only currency gaining against the US dollar, and the US dollar did strengthen against the rest. But then in the following week, this week, we're seeing the US dollar retreat once again. Okay, let's go back to the slides. So that's what's going on. The mood is relatively, stock market's relatively relaxed, but there is more volatility than we've seen before. The trend of the strengthening oil prices, the recovery in oil prices continues. This comes despite the fact that production in the US continues to be high, and also OPEC production is high, but there is some talk that Saudi Arabia and other countries are beginning to become interested in cutting production. I think nothing will come out of this, but it's also a bit seasonal. There's still, prices in the summer tend to be relatively high. My projection remains that prices will fall once again towards the end of the year, as we've seen in 2015 and 2014. Let's look a bit more at data before we move to the charts. So the main data points in the past week or so: German GDP beat with 0.4% growth quarter over quarter. So the German economy is growing less than in Q1, but that was totally expected, but better than expected. So I would say it's good news for the euro, for Europe. That's one of the reasons the euro is gaining, the highest since Brexit. I'll show the chart soon. Retail sales, flat on the headline, weaker on the core figures. It's a big disappointment. Consumer confidence in the US, no surprises, more or less as expected. It doesn't rise, doesn't imply higher retail sales in August. Japanese GDP, yet another disappointment. And of course, in the end, we have the weird reaction. Sound cuts. Ed. Oh, good morning, Hans. Good morning, Ed. I hope you can all hear me. As far as I know, the sound is okay. But anyway, Japanese GDP. It disappointed. It came out flat, 0%, not a rise of 0.2. And we have the weird reaction there with strengthening of the Japanese yen. Okay, yesterday we had CPI in the UK. It was interesting. It came out at 0.6. Sound is okay, Hans? Okay, good to hear that. Pun intended. In the UK, in the United Kingdom, we had the first post-Brexit inflation figure. It came out at 0.6, better than expected, and especially PPI, producer prices, came out at 3.3 month over month. It shows that the impact of the fall of the exchange rate is significant for the UK economy. Okay, because that so prices of imports, things that come from abroad, have jumped. So far, producers have taken a hit, but not consumers. It might reach consumers later on, but it's important to remember that in any case, the Bank of England did note that they will look at such things as transitory. Okay, so if we have higher inflation because of the weaker pound, it's only temporary. The underlying economy is weak. Okay, we also had inflation figures in the United States. So yeah, so that came slightly below expectations, but not anything to rock the boat, sort of adding to US dollar weakness. And in New Zealand, deployment came out better than expected, but I would mention that they changed the methodology there, so it might be a bit distorted. Well, let's begin looking at the charts and see the dollar weakness. So, as usual, euro dollar, the king of currency pairs, it reached higher ground, touched, well, crossed 113. All right, so it's the highest post-Brexit level, currently at 112.60, above support there at 112.40. Let's zoom out just a bit. Why doesn't my, yeah, 1 hour. Okay, so as you can see, we got close to that resistance line of 113.35, basically went up one level. Maybe we're finally seeing a big break here. This is the big Brexit fall, okay? We reached 114.20 and then crashed all the way to 109.10. Since then, there's been a very frustrating range. I think last time, yeah, we did it last time. We had a segment called What's Wrong with Euro Dollar? Okay, so maybe it's improving, maybe it's moving a bit to the upside again. Levels are restricted. 112.40, 111.90, and 111.50 are support lines. 112.50, sorry, 113.35 and 114.20 are lines of resistance. Okay, pound dollar. Here we had a gradual, well, of course, this is the big Brexit fall. We had it gradually fall down. Remember, the Bank of England was dovish 2 weeks ago. Okay, it was on August 4th. We gradually fell all the way to just over support there at 128.40, the level that the pair has seen when there was uncertainty about the new government, and from there we bounced back up. But the weakness of the US dollar, more than anything else, more than UK inflation figures, pushed the pair higher. It had a struggle with climbing over 130, but here we are. Anyway, some support at 129.50, resistance very nicely reached there at 130.60. Further resistance 132.50 and yeah, 133.60. Currently, we're one range higher, but still I see weakness in the British pound because the Bank of England sees through inflation, wants to ease more in November. The government is not doing enough, at least, well, they're on holiday now in the summer. So I see more potential weakness in the pound because the recent strength is mostly driven by the US dollar. Dollar yen, here the yen is seeing real strength. Okay, so yesterday we had a dip under the 100 level. Basically, dollar yen lost a digit. Okay, we bounced since back up. There was some talk from the Japanese authorities, from the Ministry of Finance, and from the Bank of Japan that they might intervene. They didn't say it directly, but they said they're watching Forex moves very closely, so markets were taken aback. I would say that interventions are usually short-lived, and markets usually are not afraid of the Bank of Japan. But there's some kind of tactical retreat. Maybe the markets went too far, too soon. Anyway, currently at 100.80, 170 is 100.70 is some kind of support. The round number of 100 is of course closely watched, and then we have the post-Brexit low of 99. Further resistance 101.50. Okay, but in general, the yen is showing a lot of strength. It attracts safe haven flows, and markets were disappointed by the action, by the stimulus, both from the Bank of Japan and from the government. So there is some more potential perhaps for yen strength. Dollar CAD currently at 128.80. Big fall here in dollar CAD, strengthening of the Canadian dollar, not based on domestic figures, but actually on, of course, on oil prices. So, well, we had this support line. It's getting weaker, 128.30. It's followed by much stronger support on the downside at 127.50. On the top side, we have 129.10 working very nicely as resistance, and above this 130. I must say that technical behavior of dollar CAD is looking quite good. Okay, so these are the levels. Let's jump from the Canadian dollar to oil prices to show you what a nice rally we had here. So until the beginning of August, we had a gradual fall, sort of 2 steps down, 1 step up, or 5 steps down, 1 step up, until we dipped under the round 40 level. But the black gold, as it's called, didn't stay there for too long. Gradual climb, some struggle here with resistance at 43.25, and after a significant correction, we're back up once again. I don't think this can go too far. The US shale industry is very flexible. The number of oil rigs, as reported every Friday, is still on the rise. I believe that perhaps after the summer we could see oil prices tumbling down. It doesn't have to be exactly in September or on September 21st or any specific date. Timing is, well, hard to pinpoint, but in general, I remain bearish on oil prices. Anyway, resistance at the round number 47, I would say maybe some support here, but let's add another line. 45.40, 45, but well, 43.25 is more significant. 47 on the top side and 40 on the downside. Of course, these are key levels in WTI crude oil, not to be confused with other oil prices, but this is clearly the driver of the Canadian dollar. Canadian dollar is actually, well, the lowest since last month. Moves aren't big, but they do respect technical lines. Okay, let's continue with the Aussie dollar. Here it's been a bit more choppy. Okay, the Reserve Bank of Australia did cut rates, but remained relatively upbeat. The meeting minutes released earlier this week were quite balanced. The pair remain, well, balanced, I would say, is the best word, between support at somewhere 76.40 to 77.40. Relatively high ground. 78.40 is the big line on top, and 75 on the downside. Quite stable. We had some figures from China in past weeks. They weren't so good, but Aussie didn't take it so bad. When there's a risk off, when there's a risk on mood, when the US dollar is selling off, the Australian dollar benefits. Again, this morning, we are seeing a bit of a slide. We're seeing the same in other currencies. Well, there is some correction in the US dollar, but the trend for this week remains US dollar sell-off. Also, the Kiwi dollar slipping just a bit, but with the good employment figures, we had a challenge of 73.30, which was resistance. The first attempt, we even went a bit higher, but reached below this level. Last week, we had, I didn't mention it, actually it was last Wednesday, we had the Reserve Bank of New Zealand deciding to cut interest rates. Okay, they it wasn't a surprise. It was so well telegraphed that the reaction in markets was a rise in the Kiwi dollar. In addition, they even told us that they hinted heavily that they're going to cut rates once again, perhaps this year. Nevertheless, the Kiwi dollar had a violent buy the rumor, sell the fact reaction. And well, it remains strong because now it has also fundamentals to support it. So things look good also there. Okay, let's continue with other currency pairs. The Swiss franc. Well, here we are seeing the same kind of trend. Sorry for that noise. Hopefully now there's less noise. Anyway, 96.30. We dipped under 96.40, which is support line that accompanies the pair for quite some time. For further resistance, well, 96.40 is now resistance, followed by 97, further resistance 98, low support 95.40. Swiss franc doesn't have any specific behavior. We're just seeing a reflection of the US dollar weakness, and well, this morning a bit of a recovery. Euro Swiss very stable. extremely narrow range, basically flat on the day. 108.45, the old and beaten 108 handle, okay? 110, some kind of resistance, 107.60, some kind of support. Euro pound, here we are seeing, well, we've seen basically the weakness of the pound until, well, yesterday. So we had this cross reaching even higher levels, okay, because the euro was stable, recovering, and the pound suffered another bout of weakness. We crossed the 87 line. I think it's the highest level in a long time. Let's, yeah, so actually we reached the highest level in euro pound since August of 2013. So the highest in 3 years here. Further resistance, 87.70. But since then we did retreat, currently at 86.50. Okay, so basically the pound renewed its falls on mostly on the Bank of England, and then the euro remained stable, enjoyed some weakness of the US dollar. So we had this move to the upside. Currently, we're just under resistance here at 86.50, and we had quite a nice ride to the upside in euro pound. Euro yen, much more stable, 113.57 at the moment. I think it also last week when we talked, it was at the same levels. 114.50 serves as resistance and 112 as support in this cross. Don't know how many of you are trading this cross. Pound yen, of course, much more exciting. At some point, the pair was well, struggling with 140. Then we fell. 133 served as some kind of line, and we already reached lower ground. 129. It's basically 128.50 is the post-Brexit low. Okay, not immediately. The first Brexit bounce was 133.20. That's where we found some support at the beginning, but then the pound fell to deeper ground, and 129.50 became lower support. So currently we're in this low range, very wide range, of course. Pound yen is always a very exciting pair. The Gepi, the Dragon, lots of names for this pair. Currently bouncing a bit back, 131.30, support 129.50, resistance 131.10. Okay, so I think we covered all the usual stuff we cover, all the currency pairs, crosses. Questions, of course, are welcome. Let's move on to other stuff we have today. So today on the agenda, we have the UK jobs report, very important, but it's important to mention that it's going to be confusing. Why? Well, it's confusing each time, but this time more than ever. Why? Because Lucas says there's a strong case for euro pound top over here. Yeah. As the chart showed before, we had a very, very strong rise, and then boom. Oh, you want to share your chart? Okay, so let's share the chart, and it's also in the context here of the upcoming release in the. So, oh, I see. Very nice trend line. Worked as support since, well, wow, a long time ago, since the crisis. And then the pair, this cross fell below, and now it's tackling this line once again. So it's very, very long term, right? And now we're at the top of this. Okay, let's see how things work out for it. I still see more weakness in the pound, so fundamentals support another rise of euro pound, but technicals, as you said, well, fundamentals, the wider picture is that Brexit is also bad for the Eurozone. But at the moment, it seems that, well, worse for the pound. Anyway, thanks for that. We have the UK jobs report, what it began saying. We'll see, and this could affect, of course, this trend line that Luca shared with us. Thank you. Is that we have the jobless claims figures called in the UK claimant count change. These are figures for the month of July. So that's post-Brexit. So learn if more people are claiming jobless benefits, okay, unemployment benefits, immediately after Brexit. I don't think there will be such a big difference. Movements in jobs markets are not that quick. And also the unemployment rate and wages will get those figures as well. And these figures are for the month of June. So some data is pre-Brexit, some is post-Brexit. I expect a very choppy reaction, and perhaps maybe to support what Lucas said, maybe today figures will not be bad enough, so we'll not have another fresh round of weakness for the pound. Perhaps we'll have the same reaction we've seen yesterday with inflation figures, more strengthening for the pound. Okay. Then, well, every Wednesday we have the US oil inventories. Also here, I believe it could pour a bit of cold water on oil prices that are also rising and rising and rising, but you never know. These figures always surprise. And the main event for today is the Fed meeting minutes. We'll do a special segment on that soon. So stay tuned and let's continue with more events this week. Tomorrow, well, overnight, we have the Australian jobs report, as always, very important. Let's see if the Australian economy gained jobs and the unemployment rate remains stable and relatively low. At 8:30 GMT tomorrow morning, UK retail sales, the most important UK release of the week. Also for that, we'll do a special segment about this currency in focus, the pound. Final Eurozone inflation figures should not rock the boat too much. Tomorrow, we have also the ECB meeting minutes. Could be a bit more important because last meeting did not consist of new forecasts. It was sort of more of a summer mode for the ECB, so maybe we'll have a hint for September. Usually, the ECB releases the minutes so late that it doesn't really matter. We also have the Philly Fed figures in the US. Manufacturing, well, became less important than weekly jobless claims. And Bill Dudley of the Fed speaks. This could be more important because he left the door open for rate hikes this week. I don't think markets believe him or anybody else, but it sort of allowed the US dollar to recover just a bit. Okay. So maybe he'll say the opposite tomorrow. And on Friday we have, well, it's a relatively light day. Public sector net borrowing in the UK could move the pound, but less than retail sales, and the Canadian retail sales and CPI on Friday. So if you're trading the Canadian dollar, Friday is a really big day. Otherwise, it's a relatively light day with relatively low volume in the summer. So it means that moves can be big, but not no significant release. Okay, so these are the events for this week. Now let's do a preview for the Fed meeting minutes today. So these are meeting minutes for the July meeting. Okay, in July we had no press conference and no new forecast. We only had the statement. What did we see there? The Fed did acknowledge the improvement in the US economy. Okay, so we already know that growth was, well, slightly better, nothing really, really strong, but there was some improvement. Some figures should have improved. Also, the non-farm payrolls report for June was better. Okay. Also in June, not only in July. What we could have when we have a meeting, when we have minutes that come after a meeting with no press conference, no new forecast, the minutes you tend to move markets a bit more. Okay. Because they shed more light, they pour more information that we didn't know. Meetings that do have a press conference and first forecast, sort of, they already spilled the beans. So this time the minutes could be more interesting. Secondly, I want to remind everybody that each time I say it with the minutes, in theory, these are minutes of the meeting. This is sort of a raw protocol of what was discussed back then. That's in theory. In practice, the document, the meeting minutes, is a document that is revised, redacted until the very last moment, until this week. That means they could shift the tone just a bit to reflect recent events in markets, okay? Doesn't mean they said, okay, we know that the NFP is going to be strong. And it was great, and we know that retail sales are going to be weak. No, it's not going to be that direct. But they could be a bit more hawkish about the economy, a bit more dovish. So I think anything can happen. So I would expect them to be relatively more hawkish because of the NFP, be a bit more upbeat on the economy than the statement, and perhaps support the US dollar. Again, this is not guaranteed. The Fed always says on one hand, on the other hand, on one hand, on the other hand. So we could also have it now. Last meeting minutes release, it was for June. It was quite a snoozer. It didn't move markets. Anyway, but I have higher expectations this time. Minutes again could relate to the non-farm payrolls. I don't think there's going to be a rate hike in September. The chances are quite low. To show you here the Fed Watch expectations. So after some comments again by Dudley, the chances moved up to 15% from about 8%. 9%. It's still very insignificant. It's still even in December already there is a chance of a rate hike, because that's after the elections, I think, more than anything else. But don't expect anything big. Another thing to watch out for is minutes tend to balance the statement. So if the statement last time was only mildly upbeat, only they paid lip service to the improvement in the economy, but basically they were quite cautious and did not hint of a rate cut. This time it could be a bit more hawkish, and maybe the rest will wait for Jackson Hole. So at the end of the month, actually next Friday and Saturday, we have the Jackson Hole Symposium. Jackson Hole is a beautiful place in Wyoming, the middle of the United States of America. And we have there a gathering of central bankers, most importantly, Janet Yellen. And in the past, her predecessor, Ben Bernanke, used these events to hint about monetary policy. Janet Yellen in the past few years did not take these opportunities, so it could be, again, a snoozer. But markets, you'll hear many analysts say, okay, that was not important, the meeting minutes, but wait for Jackson Hole, okay? But to conclude, what I think is that it'll be slightly more hawkish this time because of the non-farm payrolls, but no real hint about a rate cut, perhaps a very, very minor boost to the US dollar. Remember, it's released in the middle of the US session when London is closed, Tokyo is closed. So the first reaction might be relatively shallow, and then we'll have a second reaction in Tokyo, and the biggest reaction in the European morning. Okay, so that's the Fed minutes preview. And before we move on to the next segment, I see here a comment by Luca. Luca says, trading the euro-dollar is like Facebook dating these days. An exercise in frustration that I do not participate, but for euro-dollar lovers, we gave that TL another kiss, and probably we may be headed down to 111 area once again. And you're sharing a chart, so let's share it with everybody. Yeah, trend line that you mentioned is quite frustrating. Now we're again, we fell below the trend line, now trying to catch up with it from the bottom. Yeah, I would, the keyword for me in euro-dollar is frustrating. Yeah. All right. So thank you for that. Okay, now let's move to the next segment. Sterling Spotlight. So up to now, we only had soft data. What does soft data mean? Soft data means surveys. So various institutions, including the Bank of England, Market, an organization that publishes the PMIs, and other ones, they talk to investors, some talk to consumers, and they ask them, what are your intentions for hiring? What are your intentions for investment? And they ask consumers, are you going to spend more or less? How do you see your financial situation? So post-Brexit, all these surveys that came out, some of them well, most of them in the thousands of people, consumers or investors, they were very negative, okay? So the PMIs, the most important ones, they dropped to contraction territory. According to market, they imply a contraction in the UK economy, potentially a recession. So a big shock out of Brexit. Also consumer surveys, retail sales surveys, all of them were negative, okay? That's sort of the main reason that the Bank of England did what it did. Cut interest rates by 25 basis points, add 60 billion in normal QE, 10 billion in corporate bond buying, announced a new plan, the TFS, and did other small changes, everything to support the economy through the kitchen sink. That's why the pound fell. Finally now, 6 weeks after Brexit, nearly 2 months even, we get some hard data. What does hard data mean? What actually happened in the economy? So it's been a gradual warm-up. Yesterday we had inflation data, which is important in normal days for the Bank of England. Higher inflation means higher chance of rate hikes, lower inflation, lower chance of rate hikes. These are not normal days. Again, the Bank of England sees through this transitory inflation. So if prices, the pound fell some 10% against the US dollar and quite a bit against other currencies as well. So now prices of imports are becoming more expensive, but companies are going to absorb this, okay? Today we'll get employment figures. Again, some figures from July, some pre-Brexit from June. But tomorrow we have the most important figure, retail sales. What did consumers actually do? Not what they intended to do, not what businesses thought they would do, but what they actually did in the month of July. So that's the most important release. We have it tomorrow at 8:30 GMT. I think we'll have, as usual with the pound, I'll mention the releases at 8:30 GMT. From around 8 GMT and sometimes earlier, we have these erratic movements. Markets are front running. Sometimes there's a leak, a rumor. Sometimes it's just sporadic reactions, stop loss triggers, and things like that. So we might have action even before the release. And then on whatever outcome, because we have no idea if consumers were really shocked and bought less than they were expected to, or continue doing what they do. Remember that some things you need to buy food, you need to go out. You want to go out and dine you need some clothes. If your car is broken, well, it's something you can delay, but things need fixing. Anyway, tomorrow we'll see if the shock of Brexit, something that clearly dominated the headlines that nobody could have avoided in terms of news, if it actually had an impact on what people bought and what they didn't buy. So I think it's a huge event tomorrow. It'll move the pound throughout. I think also today and also tomorrow. Of course, and also on Friday. Finally, it's what people actually did. Other things to note in this context of pound is that the Bank of England is the one central bank that had a big impact. Okay, Carney managed to kill, well, not kill, it's a harsh word, to send the pound down with the comprehensive package much more than expected. And this comes in a time when the Bank of Japan disappointed, the Reserve Bank of Australia cut interest rates and the Aussie strengthened, the Reserve Bank of New Zealand cut rates and the Kiwi strengthened, Draghi is losing his magic, so Carney, for me, remains he's my new favorite central banker. And yeah, so I think it's a big release. It could be a make or break moment. So we had the pound falling and then recovering, currently at 130.25, 130.60, 131.50 are the lines to the top side, 130, of course, to the downside, followed by 129.50, 128.50, and 128.40, and to the downside, 127.90. That's the post-Brexit low seen a few days after Brexit. If the result is really terrible, I truly believe there's a chance we'll break below the post-Brexit low. That means the lowest in 31 years. And if it's a good result, we could gradually climb towards 135. So I think this takes a really high. Of course, it's not the only data point, but it's sort of the most important one. Consumption in the UK is about 60-65% of the economy, not as high as in the United States where it's 70%, but quite significant. Okay, so for me, it's clearly a huge event. Okay. Yeah, so that's our Sterling Spotlight. Okay. Let's move to the next segment. So this is the preview for the week that begins on August 22nd, ends on August 26th. Once again, a slow start, nothing worth mentioning on Monday. On Tuesday, things warm up a bit with Eurozone PMIs, purchasing managers indices. We've seen the figures for July. They weren't that bad, only slightly weaker. Now we get those for August. We have also new home sales on Tuesday in the United States. Housing sector has been relatively strong. We've seen building approvals and housing starts yesterday. They were okay. This should also be okay. On Wednesday, we have existing home sales, which is most of the market, but has less economic collateral impact and crude oil inventories. On Thursday, things become more interesting with German IFO business climate. This week, we had the ZU figure, which comes before IFO, but it's less important. IFO is Germany's #1 think tank. So that comes on Thursday. And then durable goods orders, the level of investment in July. It has been quite worrying of late and could be worrying also this time. Let's see if we have a recovery. Yeah. And on Friday, it's a very busy day. The second release of UK GDP for Q2, remember, pre-Brexit. And the second release of US GDP, more important because in the United States, these revisions tend to be quite big. So the first release was poor, 1.2% growth, and now we're expecting a bounce, okay? And on Friday, if I'm not mistaken, we'll talk about this next week as well, but we have the speech of Janet Yellen. It could be on Saturday as well. I'll keep you up to date on Wednesday, but anyway, this gathering of central bankers begin. Expectations could be high, could be exaggerated, and eventually central bankers could say absolutely nothing, but you never know. I'm sure there's going to be hype about this event. So next week, relatively light week again. In theory, we're in August, but exactly in this week last year, in the penultimate week of August, we had the crash of the Chinese stock market that triggered safe haven flows. The yen skyrocketed, and also the euro skyrocketed. Actually, euro dollar then made the move to 117. So you never know. August is not such a quiet month. It's not Christmas. It's not New Year's. It's some people are on vacation, but some people went on vacation already in July. Another thing I mentioned here a few times in the show, that when we have the Olympic Games, well, they're finishing the end on Sunday, but this is a chance when the world is focused on something to do something else. So, for instance, the tension between Ukraine and Russia now, I think they're taking advantage of the Olympic Games. You never know what's going to happen. Again, the Olympic Games were in focus in the end this weekend. And now, I mean, some things have happened in US politics. I didn't talk about this at all. And we could have more developments next week. At least the focus will return in terms of US traders. They'll watch less gymnastics and swimming and athletics and follow more US politics. Clinton continues her lead in the polls. It's been relatively stable. It's more than a convention bounce. It's mostly, I would say, not a Clinton lead, but a Trump failure, a Trump meltdown, as Time magazine put it. But everything is still open. It's a 5-6 point lead, and it could be closed. There are 3 debates going on, and 3 months to go, 2.5 months, so anything can happen. Markets usually prefer Republican. In this case, Trump is that outlandish that they prefer Clinton, which is a known politician. And let's see how things develop. I think next week we'll go back to talking about that more in depth. Of course, if we'll have developments. So far, there hasn't been such a big impact on markets, but we're still really far from the elections, far from the debates that begin in late September. Okay. Any questions? Okay. Let's take another look at what's going on and then do the wrap up for today. Not much during the past hour, during the show. Hardly any movement in euro dollar. Return to frustration, as Luca mentioned. Also, the pound is stable. Yeah, and a bit more movements. All right. So the wrap up for the live market open for Wednesday, August 17th. All in all, the US dollar is retreating, is down. This morning, it's a bit, shows us some kind of recovery, but in theory, general, it is weakening, mostly due to retail sales. The mood is relatively relaxed. There is more risk on atmosphere, which supports, well, there's a recovery in oil prices, and markets are a bit, well, at least in the UK, holding the breath for the verdict on hard data on Brexit. Important figures that we had: US retail sales, that's the release that hit the US dollar hardest. Japanese GDP disappointed, and there are low expectations for the Bank of Japan and the government to do more, so this leads to a stronger yen. And yeah, and the Kiwi dollar is supported by a very good jobs report, but remember, data is a bit skewed. Today we have the UK jobs report. Some of the data is post-Brexit, that's the jobless claims, the rest is pre-Brexit, wages and the unemployment rate. The big event for today is the Fed meeting minutes. These are minutes from the July meeting, which had no press conference and no forecast. It could be more important, more impactful than the previous minutes. I expect a slightly more hawkish tone thanks to the better than expected non-farm payrolls of July. But the Fed usually tries not to rock the boat, tries to keep us asleep with this event. Doesn't mean markets will remain asleep. The big event for tomorrow is the UK retail sales report, because that's finally some hard data on how the UK consumers reacted to Brexit. Also worth noting is the ECB meeting minutes and Bill Dudley's speech tomorrow, number 2 at the Federal Reserve. Friday is relatively a quiet day with the focus on Canada. Okay, let's look at the charts in this wrap-up. So euro dollar did make a move higher. It's the highest at the highest level since the end of June. Resistance 135, 113.35 and 114.20. Support 112.40 and 111.90. Continue with the pound 130.20, also recovering only because of the weakness of the US dollar. 130.60 resistance, followed by 131.50 support, 130 and then 129.50 and 128.50. I believe that big levels could be broken tomorrow, just enough to the upside or to the downside. Dollar yen dipped yesterday under 100, currently at 170. 170 is some kind of support, followed by 199. To the upside, we have 101.50. Dollar CAD enjoying higher oil prices, risk on atmosphere, 128.64. 128.30 is support, 129.10 is resistance. The Aussie dollar 76.75 at the moment, a bit lower today, but in general it's stable and high, 77.40 and 76, some kind of levels to watch here. 72.65 is the level currently seeing on the Kiwi. 73.30 is very strong resistance, low support at 71.60. And yeah, I guess that's it for the wrap up. Last questions, comments here. Thanks, Luca. I will enjoy the Barcelona sun. I must say it's a bit too hot for me the past week, but I'll survive. It's not too shabby. Again, markets are relatively quiet today. There aren't too many events going on, but I think things will definitely warm up tomorrow. Yeah, so that's it for today. Thanks everybody for coming. As usual, the show in its entirety will be available on FX Street and the special segments as well, so you can watch it also later on for all the previews and everything. And we'll be here next week, the same time, Wednesday, June. Next week, August 24th at 7 GMT. Okay, so that's it. Wish everybody a safe and successful trading day today, and see you next time. Thank you, and bye-bye.